Hey traders, Raghee here, and in today's video we're going to talk about what continues to work, the kind of movement that we continue to see, and what is it that's looming off in the horizon that we need to be aware of. Probably the most important, you could see right here, kicking off in the notes, that we have CPI tomorrow. That's going to hang over the market. We've got witching, our triple witching, that's going to hang over the market. And when things are looming off in the distance, kind of like the dark at the top of the stairs, right? There's a lot to be said about why trading could be difficult, that follow through day after day could be difficult. And nowhere can the difficulty with follow through be seen probably better than some of the indices. So if I take a look at the daily time frame of some of these indices, take a look at the way in which yesterday equity markets went straight up, and today they basically have equal size candles straight down. Environments like this are notoriously difficult to have overnight trades follow through, right? If I can't even get some follow through to the upside after a big day like we had on Monday, and Tuesday just takes all that back, we're just in a holding pattern. And when we're in a holding pattern in a neutral environment, that's where shortening things up to the 5-minute time frame and today trading makes so much sense. We just keep coming back to, it's not that we can't trade, it's the way that we're expecting follow through to occur, the time horizon, how long can we expect to be in a trade. All right, so let's go through that. I'm going to kick it off with something that I did not get a piece of. Right? And I think a lot of traders out there are going to say, Rog, we can't touch all the water. And that's true. Let me show you a fantastic miss. We came back to this a few times during the session because NASDAQ futures were kind of choppy but bearish because we were below the key level of sentiment, right? So I really wanted to be short tech stocks, but NASDAQ wasn't red trend. However, if I look for a relative performer, a relative outperformer within tech, one of them was Meta. We already had a very bearish look at Meta. And so if this was going to be a proxy for a NASDAQ short, it made a lot of sense. Let me show you what was in play here. We had the red multi-trend in play here. We had our HPMR, red resistance HPMR in play. We were trading below the 200 propulsion. Everything we would want was in play here. So this is where sometimes the tools are there, but again, we can't touch all the water. But look how beautiful that setup is. If you can recognize this, the reason I share this is, A, it worked, and B, if you can recognize this, then you know how to take advantage of weakness at the stock level when you want to trade the index, but it's not organized the way we need. Now, on the flip side, I had another issue. I wanted to get long possibly the Dow because the XLF was looking pretty darn good, but I could not get the Dow to turn into an uptrend on the 5-minute chart. But the XLF was doing a better job of giving me glimpses of strength, just glimpses of it, right? Okay, so that was XLF. We tighten that up to JP Morgan. And all of a sudden we're thinking, here's a pretty decent relative outperformer in XLF. We had a couple windows of the strength, and within one of those windows, we went ahead and took our long position in JP Morgan. So I don't want anyone thinking, oh, this is a stock trade. No, gang, it's a proxy for Dow, for financials, and that proxy led us to JP Morgan. So when you have the fluidity of going from index to sector to stock, when you have that fluidity, the entire market is your playground. And that's what we want. This is a really great trade in JP Morgan where we were able to buy something for about $1.53. And as we ended the day and our very last bid of JP Morgan was closed out by 3:50 p.m., this was trading at about 280-ish, right, in this area. So not a terrible trade. All right, so ultimately what I'm really trying to convey is that the kind of chop that we're dealing with is ideally suited to today trading, right? Because the dark at the top of the stairs, we know what it is. It's not just a CPI. which will have significant implications for what the Federal Reserve may do, not for the September meeting, but for the November and or December meeting. And then, of course, triple witching, which is enough to make anyone concerned about follow through. We're going to have the rollover of the indices. We're going to have the rollover of currencies. The bonds have already rolled over. These quarterly contracts are going to go from the September contract to December. So there's rollover gaps to contend with. All of these things are uncertainty. And when we are scared of the monster under the bed or the dark at the top of the stairs, shortening the time frame is going to continue to work. And here's just a couple of ways that we did it. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.